Good morning. This is George Kachuk with RCM Wealth Advisors reporting you from the CME Group trading floor, and Happy New Year. Here we are in the last few days of December. So let's talk about what's going on in the equity markets. As we end up the year, the biggest question in most investors' minds is this rally that we're in sustainable, and what does 2014 hold for us? Well, basically it's a very hard question to answer, so instead of trying to predict and give our opinion as to what's going on, I think it's more important to take a look at what do we know now about the market, what do we see going on right now, and that may perhaps give us a clue as to where the market's going to go. Okay, so right now we look at a lot of our indicators, and for instance we'll look at the sentiment surveys, which point to extreme bullishness, very little bears left, which is a bit of a contrarian indicator, and that kind of tells us it's not such a good thing. Same thing with the CBOE put to call ratio is down to about 0.6. It's been there for about 2 weeks, and again that tells us that there's no fear in the market, no one's buying insurance in terms of puts. So again, it's a contrarian indicator, not pointing the best picture going forward. However, we need to take a look at a lot of other things, and let's take a look at the general indexes. All the indexes, the S&P, the NASDAQ, the Dow, the Russell 2000 are hitting new highs. In fact, the Dow theory remains intact. We have the Dow Industrials hitting a new high along with the Dow Transports, and that pretty much tells us that the Dow theory tells us when both of these indices hit new highs, that indeed is a bullish market. Also, we look at the underlying sectors in the S&P 500. We have financials hitting new highs. We have the industrials. We look at the XLI. We have the housing sector, which was lagging pretty much. It kept trying to get off at bottom, couldn't do it. And this last week, if you look at the XHB, it's the Home Builders Index, it cleared the May 2013 high, and it's at a brand new high. So again, very positive for the market when we see all these sectors moving higher in unison. And the most interesting thing is copper also hit a 8-month high. It took out the May 13 highs the same week when the home builders went up. Now copper is very sensitive to the economy in general. So again, this is telling us possibly that the market's improving. Now we look at the NYSE and the NASDAQ advanced decline lines. Earlier in December, they were sloping down, and this week, again, they hit new highs. So pretty much the market has generally improved throughout the December. Although we're moving new highs, the breadth has improved. The quality stocks that are breaking out the new highs are able to hold those highs. And also one of the other things we want to talk about is, so is there an underlying theme that may drive this market further? Well, another interesting thing, as copper and the home builders hit new highs, we have the Baltic Dry Index, which is an index that measures the amount of shipping of things like coal, iron ore, and grains around the world, also moved to a 3-year high. And along with this, we saw the steel producers, which were kind of a little bit of a lagging group, they also started to move higher. So you look at Nucor Steel, Steel Dynamics, AK Steel, US Steel, all these stocks are moving higher. Freeport-McMoRan trying to break out near a pivot point, also trying to get into a new recent high. So we have a lot of these indicators telling us that the market's still healthy. So we don't know what's going to happen in 2014, but the way you can stay on the right side of the market is keep looking at all the subsectors of the S&P 500, look at the technology, industrial, financials, healthcare. That'll tell you where the market's going. Also, another thing to note is the staples and utilities, consumer staples and utilities are lagging the market, meaning no one's rushing here, no one's taking a defensive stance to get into these sectors. That again tells us the sector's pretty healthy. So this should continue at least for a while, but that's to be seen. So as always, let price and volume be your guide. Have a happy new year. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.